Welcome to a 5 minute think tank series, Alternative Investments. My name is Nitin Mathur. I'm the co founder of EV Capital, a fintech platform which allows investors to securely invest in select non market linked alternative investments, such as real estate, that includes commercial as well as multifamily residential. The platform also allows retail investors from any part of the globe to own fractional shares of high yield generating single family or commercial homes, as well as properties across the US starting at just $50 itself. So, a very thought provoking idea in a conversation actually I was having yesterday with one of my neighbors who turned 60 a few months ago on the topic of income for retirees. Retirement can be a time of great uncertainty for many individuals, with many retirees actually wondering how they will generate a steady stream of income to support their lifestyle. One solution to this problem is to create a passive income stream, which is an income that is generated with little to no active involvement. You probably end up spending less than 2 hours each, just the entire month itself, to look at opportunities, do some due diligence, and rebalance your portfolio of investments. So it's a very small amount of time that is required for you to invest in these type of opportunities, but they can get a really good result as well as generate a nice passive income for you as an individual. Now, for a retiree, I always recommend investing in REITs and dividend stocks, that's for sure. So that's a no-brainer. But I want to talk about some very unique opportunities of generating passive income from alternative investments. Today, I'm going to talk about three of them, but there are many more that I will introduce in our future 5 minute series too as well. So let's get started. The first one is rental properties. I think investing in rental properties can provide a very nice steady stream of rental income, as well as the potential for appreciation and value of the property itself. Now, this can be done easily via platforms such as EV Capital, where we have taken the effort of performing the due diligence, the general maintenance, rent collections, so we can deliver a very high yield, which tends to be sort of long performed better than a traditional stock and bond investments. Feel free to check it out. Feel free to visit eminentcapital.co and explore opportunities which are laid out in very simple terms, easy for any layman to understand. The second opportunity is peer-to-peer lending, also called microloans. This opportunity allows you to loan any cash you may have to someone who is in immediate need and charge them a few basis points or a fixed fee. Now, many platforms have mushroomed in this particular space, such as Kiva, Lendy, or Liftfund, which allows you to sort of loan your excess cash for quick returns, payable monthly or agreed terms with the borrower itself. Now, you might be thinking that this is quite risky, but trust me, some of these platforms actually come with really good downside protection for lenders in case of defaults too as well. So bottom line is, P2P investing is a fantastic way to generate steady stream of interest income, especially for retirees. Third is a very unique offering, and not many people have talked about this, but it's becoming popular as we speak. It's called royalty income, and is done by investing in income producing assets such as patents, trademarks, as well as copyrights. Now, there are a few platforms which have mushroomed in this area. It's a very new area that people have started exploring. And one of the platforms that I actually personally like is called Royalty Exchange. It gives both the retail as well as institutional investors access to royalty streams, previously available only to industry insiders, private equity, or institutional funds. Now, true to being an alternative investment, it is an uncorrelated asset. That means a stock market fluctuation does not affect this investment vehicle. And the last time I checked Royalty Exchange, they were supposedly have given out around 10% ROI on a 6-month annualized basis as well. So, but like any other investment, you should obviously do the due diligence before pouring in any cash. Now, time for tip of the day, to be honest, right? I want to keep this video very short, but there's some specific items in this times of certainty that I do want to share with you. Be rational when it comes to money investing, right? Sometimes we make really bad money decisions because we either lack knowledge. At times we make bad money decisions because we are not very disciplined. But trust me, more often than not, we can actually blame our money decisions on the way our brains are wired. It's biology, right? Sure, we need instincts. When a ball is unexpectedly thrown at us, we see it in our peripheral vision. We move our head out of the way or throw our hands up to block it, right? And we do that without thinking. Hey, it's wonderful. Instincts, right? But when we use our instincts, our gut, to make an investment decision, it often has turned out pretty bad. Now, research in this area has shown time and time again, we tend to trust our gut reactions more than our rational ones because they happen so quickly. We think they must be true. One of my instincts is really to act. We are wired to do something. It's built in as part of our biology. In fact, people often explain their actions by something like, well, I could just sit there. And emotions, unfortunately, cause poor decision making. So avoid information overload. Don't read so much that you lose your way or goal. Second, confirmation bias. Don't concentrate on just information that confirms your preconceived ideas itself. Do the due diligence to understand the pros and cons of each idea. Another one is recency bias. Now, we forget the longer past and are too influenced by recent results. So, for instance, we may have an investment that has done very well for years, but because it had a recent bad quarter, we don't like it anymore. And the fourth one is the herding bias. This is specifically very important for the crypto guys, or actually anybody, to be honest, who sort of go with the herd itself. We like to go with what others are doing and thinking. If you go back to schools or colleges, it was really peer pressure, right? And we wanted to fit into this group or a herd. Sheep know they are safer when they are going in a big group of sheep, right? And unconsciously, we think our investments are safer if we're doing what our friends are doing. So do your due diligence, take your own time, and keep a focus on facts and figures than emotions. So now with that said, I want to thank you for joining me in this 5-minute Think Tank series on alternative investments. I will see you soon in our next discussion on the topic of allocation of alternative investments in your portfolio. It's a very important topic that I wanted to share some insights as well as my research on that. Till then, ciao.